Now, if you thought the House tax cut bill was bad, wait till you get a load of the new revised Senate version of the bill. Now, The Hill is reporting that the Senate Finance Committee Chairman Orrin Hatch has now released a modified version of the Senate tax bill on Tuesday that includes 2 changes. The previously announced elimination of the Obamacare individual mandate and the sunsetting of individual tax rates in 2025. Now, interesting timing on that. Oh, we just happened to release this late Tuesday night, early morning. Oops. I mean, it's kind of late. Hopefully nobody picks up on this. Now, some people did pick up on this, and boy, is it bad. Now, The Hill explains that the sunset clause in Hatch's modified mark would mean the new individual rates in the Senate would end 10 years after their creation. And there is a reason that they put this in, by the way, and I will get to that in a minute. Now, the Senate bill also reduces the corporate tax rate from 35 to 20%. And again, this would be permanent. There is no sunset provision. Corporate taxes, once they're down to 20%, they're never going to expire. Wonderful. Now, on Monday, Hatch hinted that the temporary individual tax cuts were on the table, emphasizing that he wanted to ensure that business tax changes were permanent, so you can see exactly who he's looking out for. Now, the individual rates, the larger standard deduction, and the child tax credit also are among the provisions that are set to expire. So, now I mentioned the reason, right? So, why do they have these individual tax cuts and the child tax credit and all that stuff that actually helps regular people? Why does that expire, but why not the corporate taxes? Well, the reason The Hill gives is this expires because it has to prevent the overall tax bill from adding to the deficit after 10 years. Now, already, it's been, I can't think of that word. The CPO has said that this tax bill will cost about $1.7 trillion. It'll add that much to the deficit. So their original $1.5 trillion estimate is completely off. Now, the other reason that they want to do this is because they want to use these budgetary rules to try to shove this through on a party line vote. Now, right now, they only have 52 senators, so they're using budget reconciliation again to try to push this. All they need is a 50-vote majority, or I'm sorry, simple majority. So that's how they're trying to push this and why. Okay. Now, there is that first thing that I mentioned, is the elimination of the individual mandate. So I want to go into that. That's pretty problematic. Well, for one, look, I know it's not popular, right? I'm going to have to pay the tax at the end of the year. I don't have health insurance. I didn't buy from the private market. There's been so much fluctuation going on and all that stuff. It's like, I don't know. I don't know if insurance is going to be there. So yeah, I'm going to end up paying the penalty, and that sucks. But nonetheless, there's a reason that it's there, right? Without that mandate being enforced, without that penalty, the ACA ends up going into a crazy death spiral. That's not good. Now, that will, of course, end up costing millions of people their insurance, as rates will go up for people who have pre-existing conditions, who need medical treatment. So, again, that's super, super terrible for millions of people. Not only that, but like I said, if Obamacare gets sabotaged, which this is what's looking like, and also all the other stuff that Trump has done and rolled back, well, if they sabotage it enough, they can actually get the votes to eliminate it. And that just will equal a giant tax cut for rich people. So that's what this is all about. And add on to that the taxes that will go down for corporations. And on the other side, the taxes that will, the individual rates that will expire in 2025, the expiration of the child tax credit, the standard deduction, all that stuff. Well, that means taxes and tax breaks on the middle class are going to go away by 2025, while corporations still reap all the reward, all the profit. I think it's fairly clear who this tax bill and who this modification actually benefits. This is a signal to the donors like, hey, man, we're still pushing for you. We're on your side, donors. So keep signing those checks, man, because we're going to try and push this through. Now, there's one more piece of this bill that makes it even worse. I haven't even gotten to the worst part, right? And again, we already have those, the child tax credit that's going to go away, and the individual rates, the tax cuts that you would get as a regular person, as somebody in the middle class, those go away by 2025, which actually sets us up for another fiscal cliff type of fight, which, again, that's going to cause some serious problems. And once you give a tax cut to the rich, man, it's really hard to roll that back. So, again, that's not even the worst part. Here's the worst part. Now, we know that the Republican tax plan would add about $1.5 to $1.7 trillion to the federal deficit over the next 10 years. Now, according to something called the Statutory Pay-As-You-Go Act, or otherwise known as Paygo, it would force immediate cuts in spending to offset this reduced revenue. The new debt must be offset or Paygo requirements must be waived. So there are these rules in the Senate where you cannot have this debt. You've got to offset it. Now, if Paygo is not waived, and it can be waived, and I'll tell you how, if it's not waived, it will end up triggering automatic cuts in other programs. And again, we already had this happen in fiscal cliff. Okay. Now, a letter from the CBO said that the cuts in 2018 would total $136 billion. So immediately, that Paygo, if they can't figure it out, or if they don't waive specific programs, Paygo goes into effect, and you've got $136 billion in cuts. And that's just a small estimate. It's a conservative estimate. Now, sit down for this one, right? This would include slashing the budget to core programs like Medicare. The CBO said that the Paygo would force a cut of $25 billion from Medicare, the maximum amount allowable, and then other cuts totaling between $85 and $90 billion from other programs like Border Patrol, the Federal Student Loan Program, and farm subsidies. So, it's a win-win for them, policy-wise, because then, or I should say politically, or maybe not, because Medicare is incredibly popular. But if they can foist it on the Democrats, well then, that might be a political win, but definitely a policy loss. So what we're seeing here is, oh, look, we can't help it. Paygo went into effect. We're going to have to cut Medicare and your student loans. Also that the rich people, these corporations, can still get their tax cuts. Wonderful. And now, again, you can have a waiver, right? However, as Business Insider explains, it's never easy to get that waiver. The Paygo waiver would not qualify for reconciliation consideration and would need at least 60 votes, meaning the Republicans would have to get the Democrats to sign on to that waiver. So, and that's going to end up being a big political fight going forward. So, again, if you thought the House version was bad, the Senate version has shown that it's so much worse and triggers more automatic cuts in programs that are vitally necessary to the American people. Again, also corporations and the rich can end up getting their tax cuts that never sunset, that never go away. If you don't know who this tax bill benefits by now, then you're not paying attention. Hey everybody, thanks for watching this video. If you want to see more like this, please hit the subscribe button below. And if you want to support truly independent progressive media, please consider becoming a patron at patreon.com/TYTNation.